Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the Bitcoin related stocks. Everybody knows Bitcoin made it above 10,000, so it had that huge break above 10,000. Congrats everyone, to all the believers out there. Yeah, it ran, it had the big spike, and then it pulled back, and it did form, Bitcoin, I'm talking about here, it did form a long upper wick on the BTUSD candle 2 days ago, and then yesterday, yesterday, a long upper wick formed, and then today, another long upper wick formed, but there were two long lower wicks that formed as well, and that does show loading off of low day. I'm starting the conversation off like that because we've just been discussing this all day in our chat. I recommend people come into our new Discord chat. We have a mobile app, and we've been discussing the cryptocurrency pretty much around the clock, posting alerts, charts. It's going off right now, so I recommend everybody to come check it out. And so yeah, let's get onto the stocks here. Let's look at CME. So CME Group, they're the ones that are going to start futures trading for Bitcoin, and so that's coming up here very soon. This stock has been pushing like crazy. As you can see here, it's breaking out this week higher. So this is another play on Bitcoin for people that don't want to trade Bitcoin directly, and that's exactly what all these stocks are, except for the last one, OPTT. These are supposed to be all Bitcoin related stocks, and the big thing here is this is a very strong uptrend. You can see candles are writing EMA4 support higher, the pink line. As long as that pink line is holding, the signal is just a ride. This has been a smooth ride for many months. If you're a longer term investor, if that middle Bollinger Band's holding, it's still a strong uptrend. The break below EMA4, that gives you a chance to reload off of lower levels if you like the stock and you want to take a larger position. If you were to exit, on the break below EMA4 here, you could have loaded off the middle Bollinger Band and got a better entry point. And so that's what that's for. The bottom line here is CME Group is going to be, they're going to bring liquidity and shorting to the Bitcoin market. And so be looking out for a big change coming up once the futures trading starts, because it'll be the first time Bitcoin has ever been shorted. And so there's no telling how that's going to play out. They created basically this futures market to short Bitcoin, and so that there's going to be a major bearoid. So this is the big short. It's coming, so just be prepared for it. And it's going to be volatile. It's just going to you have to see what happens after the bears attack. Okay, let's look at OSTK here. They are pulling back. Okay, so this is bucking the trend. So I'm going to show you the next charts are all charts that are starting to really set up. But OSTK has really broken down big time. You can see here it's below 50 on RSI. You have 20 Fasto now below 20 at oversold levels. This is a level that it's bounced from in the past. Look at the last time it got below 20. That was the bottom, and then it had a gap up open and it bounced the next day. So that is really what the bulls need to see here. They need to see a bounce tomorrow and a move back above this middle Bollinger Band. It's currently at 51.75. That's the dotted purple line. If it fails to get back above that level, that could signal the start of a new downtrend. There is a gap on the chart between high of day on the 8th here and low of day on the 9th, and so a pullback down to 42 there would fill the gap. The 50-day simple moving average is just below at 40.51. That should be a great reload target for people on the sidelines. If the share price pulls back, you should get a technical bounce off of that level. So you have a gap fill and a bounce off of the 50-day simple moving average, which is a good possible reload zone if support holds. You can get a technical bounce to be another good, to be a good play for the long-term investors that are long on the stock. The candles have to be above this middle Bollinger Band. Okay, so it's going to be a risk to hold if the candles start forming below. This is where you start new short positions. All right, so if the candles start forming below that middle Bollinger Band and start riding EMA4 resistance lower, notice right here you have EMA4 that bearish crossed EMA8. So you can see right here the pink line crossed over the green line. The pink line was on top of the lime line, and then notice how it crossed below it. And so now the candles are riding EMA resistance lower. They just started. This could potentially be the start of a new downtrend. It has to correct. It could easily bounce. It's down 4 days in a row. All the Bitcoin stocks are bouncing. The last time this had a pullback like that, it had a gap up open, so it could possibly gap up open as well. We just have to see what happens. There was a giant volume spike today, and notice the lower wick pullback on today's candle, that does show loading off of a low of day. So keep an eye on OSTK for a bounce and for a move back above that middle Bollinger Band. If the middle Bollinger, if it fails to get above that middle Bollinger Band, shoot for that gap fill and 50-day simple moving average. Okay, for a reload. Okay, let's look at RIOT. It's still in the bull zone even after correcting on RSI. It's at 56. You want to see Fasto bullish cross there and get back above 50. So it pulled back today. It had 3 red candles in a row, and it did form a white candle today, and it was up on the day, but it did not form a bullish reversal pattern. Okay, so it almost formed bullish median lines. If today's close was at yesterday's close, that did not happen. The candle did not penetrate yesterday's candle far enough to have to form other reversal patterns. It formed a white candle, but it's not a reversal pattern. It is trying to hold support here. The big level is this orange line right here. 1278. Stay above 1278. That signals more upside. It has to break above this EMA 4. It's currently at 1429. We were just talking about that on the last chart. The candles, notice what happens when you get below EMA 4, like on this candle right here. The candle started writing it lower. It has to close above that level. A close above EMA 4 would signal the possible push, a new push higher, similar to this candle on the 15th. Notice how the candles were below, they pushed above, and that signaled the run. So we're looking for a break above. If it drops below that orange line, then you're looking for a reload all the way down here at the middle Bollinger Band at 1046. That's the downside risk. Break EMA 13 support, and you have the middle Bollinger Band on deck. If you look here at the RIOT weekly chart, you can see it came up. It filled the jar up to the resistance level that we discussed. And how amazing is that? We pointed this out before the level was hit. For those that follow our charts, we did the exact same thing with HMNY. So as you know, this is a reality. We do this on a freaking daily basis, so it's just charting. All I'm doing is just relaying the message. This is all on the charts. It's just once you learn how to read the charts, you will be able to see it as well. So it's just really basic charting, and it's able to locate key resistance levels way in advance. And so I really recommend people trying to take the effort to learn more. If you look here at this weekly chart, we posted this chart with this horizontal resistance line before it was hit. Okay, and notice how the candles came up, hit that level. It did close above, and that was signaling that it could possibly push higher, but there was a gap down. It failed to hold that level. That signals downside because it's just like this one here. So when a share price comes up and it has a climax event, this was a climax. It filled the jar back up to the prior resistance. That's always where you want to take some off the table. You know, that's the lock-in gains level. You know, you want to look at least to take some off. And then if the share price does start to pull back, you know that this candle was so far above the upper Bollinger Band at EMA 4, it was signaling downside risk. And so look where the candles pulled back to, right down to the next resistance level that we talked about in the last video where we showed the weekly chart. Was EMA 4 at 1375. It pulled right down to that level and bounced. It's hard to see on this chart, but that's exactly where the candle's at right now, where the closing price is just below that level. So it's still very bullish. It just worked its way back in the bands. It just got ahead of itself. This Riot weekly chart is still signaling to keep riding. There is a possibility of a bearish reversal pattern forming this week. That would be bearish hearing me. And so if that happens, you know, the candles could work into the bands. But the theory, the strategy is as long as EMA 4 support's holding the weekly chart, you know, the signal is just to keep riding. If that does break, you know, you could see a drop down here to EMA 8 at 1122. Everybody has different trading strategies, so it depends on whether or not you're a day trader, a swing trader, a long-term swing trader, or an investor. So everybody has different strategies depending on your time frame that you're planning on holding the stock. So some people hold it for a matter of minutes, and some people are holding it for months, and so yeah, or years. You know, it just depends on your strategy. So here we're going to look here at the 15-minute chart for our IoT, and this is the one that we had been working on the way up. You can see we called the breakout. Notice how when it broke above high close resistance here on the 22nd, that signaled the breakout higher, and that's where it ran. It doubled in share price. It went from 12 to 24. And so keep in mind that you always want to be, when you're charting, you want to be drawing your horizontal resistance line on that 15-minute chart off of the high of day when that first candle forms and it starts pulling back, and the share price has to break above that level to signal the chart's still bullish. If it fails to get above that, then the share price could consolidate. So it's always about breaking that next, breaking that high close. And so what happened here, the share price, it pulled back all the way down to that level. Notice this candle here on the 30th, it bounced right off of the previous resistance level, and that's exactly what you want to see. Resistance has turned into support. So this was a huge resistance level, and the breakout happened after it got above it. The share price came all the way down to it, and it held that level. Also notice that the share price did come back, and it filled that gap. You know, it came back and it filled that gap. Why did it fill the gap? Because gaps get filled. I know we talked about this in previous videos, so you can check out our previous Riot videos if you want to learn about this gap here. We discussed that. So what's going on now is you have a break above the middle Bollinger Band. So it's trying to get back in play here. It bounced. It had this double bottom here off of the key support zone, this 1250 support zone. It took the whole day to work on getting back above this middle Bollinger Band at 1329. That's the key level to hold. It needs to stay above 1329. If it drops below the middle Bollinger Band, that's going to signal downside risk. It could drop down to this 300 simple moving average at 1190. That is the downside risk of this whole setup right now. That level is likely to hold. That should hold. If the 300 simple moving average in the 15-minute chart failed to hold, the chart would be totally broken. So that level would likely hold if tested. Right now, it's trying to get back above the 50 simple moving average and the 200 simple moving average. That's the red and the green lines. They're basically at $14. $14 is the huge level on this chart. Above 14, it's ready to rock and roll. If it can get back above the 100 simple moving average at 1484, then it's showtime. Now it's back above all the moving averages and super bullish, and that's when you could talk about a retrace back up to prior levels. Fail to break these moving averages, and that could signal downside risk and more consolidation. Okay, let's look at MARA. You know, it pulled back as well, but it's still bullish on RSI. You've got RSI here at 62 in the bull zone. You have Fast O down here with a bullish crossover, so you want to see that get back above 50. You know, it formed the black candle. You know, we always say when a black candle forms to go to the sidelines, especially when it's in an uptrend after a gap up open above the upper Bollinger Band. All right, just remember that setup. Many times when that happens, it signals downside risk. You want to get to the sidelines. Those people that did not obey that rule and held overnight on the 27th were brutally punished on the 28th. Unless you were short, you were brutally punished because you had the gap down open. And so now what we have is an unfilled gap on the chart. So now there's a gap between low of day on the 27th and high of day on the 29th. And so that is the target to the upside. So what we shoot for now is for a run back up to the bottom of the gap at 552. Notice how that's lining up with the upper Bollinger Band. The big level that it's been holding is this blue line here. It's the crucial level on this chart. It's the 300-day simple moving average at 410. It has to hold. If that level turns into resistance, and notice it also has to hold this line. It's the EMA 8 at 376. If those levels break, then it's coming down here to EMA 13, and it's testing that top of the gap below. There's an unfilled gap below between high of day on the 22nd and low of day on the 24th. And so if EMA 8 breaks, it's going to come down here, test EMA 13, and possibly fill the gap. So the downside risk is if the 300-day simple moving average doesn't hold, it could drop all the way down to 275. And if that happens, you're more than likely just going to see this middle Bollinger Band tested and the 200-day simple moving average. You'd likely get a bounce off that, and the uptrend would continue. But that's a nasty drop. You know, you're looking at a nearly 50% haircut, at least 40% cut off the share price if you hold through an event like that. And that's why people trade these stocks. They're trading vehicles. Penny stocks are not for if you want to maximize your gains, you trade the swings here. And so basically above the 300-day simple moving average signals more upside and a run up here to 550, and then you'd be looking for a gap fill up to 625. 625 would fill the gap. If it fails to stay above that 410 level, then you're looking for a gap fill below and a drop down to 275, possibly 230. If we look here at the 15-minute chart for MARA, you will see that it is down here, forming a sideways channel, and then it's been trying to get above the 50-day or 50 simple moving average. That's the green line. So breaking above the middle Bollinger Band today, and then it kept trying to break that green line all day, and then finally here at 230, it it got above that level, and so it was really starting to heat up. We put alerts out. It pulled back into the close, and so it closed right on the, we call this the 50-yard line, right on the middle Bollinger Band, right where the 50 simple moving average is. It could go either way here. And after hours trading, it was at 427, I believe, when it closed. So it's right in this resistance zone. It closed right above the crucial level. Tomorrow, if it's above 424, 423, if it's above the 50 in the middle Bollinger Band, that's going to signal that it's in play, and we're going to be looking for a run up here to $5. If those levels turn into support and it fails to break the 420 resistance zone, then you're going to see more consolidation. Okay, let's look at DPW. DPW had a pretty wild chart here with the big gaps. You notice how you had the gap up open and then the monster gap, and then now there was a gap down, and then it's bouncing. I mean, this is just it's a difficult chart to chart because there's so much air on the chart. There's a lot of risk involved here. You have to be very careful if you're trading this. I would go by our EMA4 rule. If it drops below EMA4, you want to go to the sidelines. That's currently at 154. You really want to see that level hold. Notice how it's held every day on this run, 1, 2, 3, 4, 5 days in a row, basically 6. And so at close below, that would be the sign of weakness. And the risk is this big gap here fills. A drop down to the high 180s would fill the gap. And so if it stays above 154, it's still in play. What it needs to do is fill the gap above. And so you have a gap here between 195 about and a little above $2. And so you'd want to see that gap filled to the upside. That would be the target. So yeah, if it's riding EMA4 support's holding, then it's still in play and it's still bullish. You can see this is the 15-minute chart for DPW that we've been working on. You can see the big gap open and then the big gap down, and then it's formed this uptrending channel. It did break above the channel when it hit that 50 simple moving average, but it's back in it, and it's currently trying to turn this middle Bollinger Band, 50 simple moving average, and 100 simple moving average into support. It's the 100 simple moving average at 176 is the key level to break. That's this gold line, and it's lined up with the top of the channel. And so if you see a break above that and a break above the top of the channel, that's going to be your signal that it wants to head higher. Notice it has the gap to fill above. There's a space between these candles. So a run up here to about 202 would fill the gap, and so that would be the target. And then you'd be looking for the share price to get back above the previous level. So just keep an eye on a break above 176, signals more upside. If it drops below 160, that's going to signal downside risk. If it breaks this channel to the downside, it drops below that lower Bollinger Band at 155, then you're talking about a drop down to 120 and the 200 simple moving average. Okay, check out TEUM. It's still in the 50 to 70 bull zone. The chart is another odd one. These crazy black candles, I'm telling you, they are difficult because it's a bull trap many times. And you can see people, everybody was pumped up on this first one, and then of course the next one had an up day, how it gapped so high up, and so everybody was thinking, oh yeah, his theory, it's not correct, and it doesn't work every single time, but if more times than not, if you go to the sidelines after a gap up open and a black candle forms, especially above the upper Bollinger Band, you're going to be glad that you did more times than not. Every once in a while you get lucky and it gaps up again like this, and then notice how it was followed by a red candle, the second black candle, and the candles worked their way back into the bands. This gap filled. There was a gap here between the 24th and the 27th, and so now the gap filled. The middle Bollinger Band held down here at 95. As long as the middle Bollinger Band's holding, the uptrend's still intact. It needs to get above the 50 simple moving average at 107. That's the green line, basically 108. It's that you have the 100, 200, and 50 day simple moving averages all converge between 104 and 108. So above 108, that's going to signal it's in play and it wants to get running again. So look for TEUM break above 108 tomorrow, and then you'd be looking for a run back up to this upper Bollinger Band. And then these black candles are deceiving because these are the opens, and a black candle forms when a stock, it closes up on the day, but it closes below the open, and so that's a sign that even though it was up, the bears were strong enough to drive it down below the open. And a lot of times you see that when a company is diluted diluting, selling shares. And so you have for the closing price, you've got the this close here at 112.5, and then up here at 118 as key levels to break. Okay, let's look at SRAX. This is still in the bull zone on RSI and Fasto, so it's still bullish on those indicators. It's still in a nice uptrend. It got a new uptrend going when it busted back above the middle Bollinger Band. The candles did pull back. Okay, so they closed above the upper Bollinger Band. Bearish Harami reversal pattern formed. That pattern was confirmed yesterday, and then the candles pulled back in the bands. A white candle formed today, 573. Let's see, is that the previous close? No, it was 1 cent away. If it closed at 572, then a bullish meeting lines reversal pattern would have formed, but that did not form with the 573 close, but it was very close. But in no cigar. And yeah, it's got to get above EMA4 here at 593. If that level, okay, closed below yesterday, if it remains resistance, that signals downside risk. It signals it's probably going to work its way back to the middle Bollinger Band. As long as that middle Bollinger Band holds, it's in play. If it can get back above EMA4, if you see a break above 593, that signals it's in play, and then we're going to look for a run up to $7. The high close resistance level to break is up here at about 774, and so that's the level to break at the upside. It needs to hold 430 on the downside. It's just trading sideways. You want to see this previous uptrend continue. Notice on the previous uptrend, it's always good to look at the historical trend of a stock to see. A lot of times they'll repeat that type of pattern, and so it's been on the previous runs. It held EMA 13. That was the bottom, and so notice today what happened. It bounced off of EMA 13. So this should be the bottom. This should be where it holds. We should see a break above tomorrow. If not, you could see a pattern like this where it works back into the middle Bollinger Band. Nobody wants to see that if you're a bull. You want to see it bounce here and get back above EMA4. Okay, let's look at SSC. Okay, it was at frothy levels on RSI and Fasto. It got frothy. It pulled back. When you see a break below 70 on RSI and below 80 on Fasto, that is a sell signal. That signals downside risk. That signals it perfectly here. It pulled back, and then there were multiple red candles in a row. So keep in mind that's another indicator that a stock is cooling down. And if you're a trader, you want to head to the sidelines. And so now what we have is, it's still it's reset here. It's at 58. It has room to run till 70. You want to see a bullish crossover. You want to see that black line cross the red line to the upside and Fasto get back above 50. So the candles came down. Nice bounce off the middle Bollinger Band. When a stock is in an uptrend like this and it pulls back, many times you can just set your entry point for a reload right at that middle Bollinger Band level. Maybe you got to do it a penny above to get filled, because a lot of people are going to use the same strategy. But you have to use game theory here. You have to try to outthink the traders as well. And so sometimes you have to load just above to get filled. And so when the share price comes down, and hits that level, this is the reload zone. This is the bottom of the channel. You have the 50-day simple moving average and the middle Bollinger Band, which is 20-day simple moving average, both lined up together. So as long as those levels hold, there's more upside potential. So look for this uptrend to continue. The gap is filled. If it drops below those levels, it'll signal downside risk. Notice all the moving averages are all lined up here between 190 and 230. So there's a lot of support in this zone here. So we'll be looking to see a white candle tomorrow and a push higher. Let's see if we can get that going. And then one last one to leave you with is OPTT. This isn't a Bitcoin stock. I already had this up here, so I figured I'd show it to you. Yeah, this stock is setting up. It has really tight Bollinger Bands. We've been watching it for a while. Every once in a while, it will pop and it'll run a little bit. So yeah, so keep an eye on it. If you see it break tomorrow above 129, that's the 50 simple moving average. You have the 50 and 100-day simple moving average both together. Notice the dots, the green dots, how they're just lined up right with the candle. So the chart's wound up here. It could keep consolidating sideways. If you see a break above 129, it could get running. It did head fake on the 13th, and it got above briefly and pulled back. It would have to stay above that level to be in play, and then the target would be for a run up there to the 200-day simple moving average at 154. Okay, yeah, and then yeah, there is this gap here, and so you would have a target as the bottom of the gap at 145 because you had the gap down here. So yeah, so keep an eye on OPTT. Yeah, so yeah, Bitcoin is trying to break 10,000. We're thinking Bitcoin will stay in play here until the futures trading starts. They'll probably try to pump this as hard as they can. They're getting just plenty of exposure on CNBC, nonstop Bitcoin exposure. Okay, thank you. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. and check out our chat for more information. Thank you.